Democratic presidential hopeful and former Vice President Joe Biden has proposed slashing much of the tax deduction benefits for traditional 401ks and IRA accounts. Instead, he'll be capping them at a flat tax rate deduction. This could end up costing you tens or even hundreds of thousands of dollars throughout your retirement years. What you need to know about this to prepare, and a quick little flashback to May 4th of this year when I predicted that this would happen. All this and more in today's video. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, volunteer paramedic, and right now I'm pissed off. I'm going to make this clear up front. This video is not picking sides from a political standpoint, only the economics of this one single policy proposal. Biden has vowed to convert the current deductibility of traditional retirement contributions into matching refundable credits for 401ks and IRAs. Under the current tax law, workers contribute pre-tax dollars to their retirement account, thus reducing their annual taxable income. Taxes are then paid when funds are eventually withdrawn in retirement years. But according to Biden, the tax policy tends to benefit the wealthier earners since deductions are more valuable disproportionately to higher income tax brackets. For example, a taxpayer in the top income bracket would receive a $37 benefit for every $100 contributed to a retirement account. By comparison, a taxpayer of the bottom bracket would get just a $10 benefit in exchange for the same $100 contribution. The former vice president's drastic proposal, in the words of one industry lobbyist, would upend existing tax preferences for retirement savings in 401 and IRA accounts by eliminating such deductions. He would instead replace them with a flat 26% tax credit for each dollar invested, claiming that this would be roughly revenue neutral, something that the Biden campaign is aiming for. The more tax dollars set aside, the larger the tax break is. Now, I fully acknowledge having a robust economic standing in retirement years for historically lower socioeconomic classes would reduce the dependence upon federal subsidy programs for these individuals, and that's a great thing. So in general, any plan that gives these lower income earners an incentive to invest in the future sounds like a great idea. How can anybody be against this? Well, once we dig into the actual plan, not just the headlines and the sound bites, we realize how horrible of an implementation this plan really is. The politicians and the media are getting hung up on the everyone should get the same tax credit no matter how rich you are. And this reads well on a newspaper and probably gets a lot of clicks from people in Google News, but it misrepresents the facts to the reader as to how taxes and tax credits actually work. Let me quickly break this down for you, then we can address what you should do to prepare your retirement accounts should Biden win this November. Under his plan, someone earning $600,000 would get the same tax credit as someone making $60,000. An equal $260 tax credit for their $1,000 retirement contribution. On the surface, it sounds fair. Same credit for everyone. An economist by the name of Ben Harris, a Biden advisor, has gone on record as saying, "If I'm in the 0% tax bracket and I'm paying payroll taxes, not income taxes, I don't get any real benefit from putting a single dollar in the 401k, Harris said. But if someone in that top tax bracket, they get 37 cents on every dollar they put in there," he continued. And this is exactly where politicians get it wrong. No, you are not correct, Mr. Harris. It is not that the 0% tax bracket person doesn't see any benefit. They already are at a 0% tax bracket, so they effectively have a 100% tax break. Whereas somebody that's in a higher tax bracket, they're only getting the 37 cents for every dollar written off. They pay the taxes on the remainder. I don't know how this is so hard to understand. Of course, honestly, the politicians are just pandering to the financially illiterate individuals. Now, I don't blame the people here. It's the politicians, both from the right and the left, that for decades have fought to keep people ignorant of how finances actually work. That is why YouTube channels from people like Graham Stephan, Meet Kevin, and even myself are so important. Now, what is not clear, and in all transparency, I'm only speculating on this fact, would Biden's plan also remove the tax credit incentive for businesses to match contributions? If, As I suspect, Joe Biden and Kamala Harris' plan is to brand rich businesses as evil. One could easily deduce that they would like to remove the tax incentive for businesses offering these plans. For example, currently at one of my businesses, Auto Corner, we offer a 3% matching contribution. If we lose our tax credits, would we continue to provide the matching? Maybe, maybe not. I feel many small business owners will be in the same boat, wondering if they can afford to do this or not. Okay, I'm going to get off my soapbox for a minute. What do you guys think about this proposal? Why don't you comment down below and let me know. Now to the important part. What should you do to prepare for your possible tax increase? Remember a few months back when I made a reaction video about Meet Kevin when he commented that he does not like Roth IRAs and how he refuses to use them, saying instead he recommends the traditional IRA? In that video, I responded stating that I disagreed with Kevin because I knew it would not be long until politicians decided to tax traditional IRAs and 401ks. With all this in mind, I feel there is a strong likelihood that over the coming decade or two, Congress will be forced to raise taxes to cover the cost of the ever-expanding social programs. You can reasonably deduce that payroll and income taxes will either stay the same, as they have historically, or they're going to go up and higher as they did just after the Great Depression. Whereas with the Roth IRA, it would be almost impossible for a law to get passed to retroactively change the tax laws to force you to pay taxes on money in your Roth IRA. Hey, you senior citizens, remember that money you put in the Roth IRA for like the past 40 years we've been telling you is tax-free? JK, now pay up. That would never work. Such a deal would be contested legally in the courts and, just as importantly, would be complete political suicide for any party. Based upon polls, Biden shows a slight edge over Trump for the re-election. But over the past few months, that spread in the polls have been slowly narrowing. Statistically, it's far more likely for the incumbent, currently President Trump, to win the re-election, as long as the economy continues to stay at its current level or improve. But who knows? Sometimes the electorate will surprise everyone, like what happened back in 2016. Either way, no matter who wins, actually my advice here is basically the same. It does not really matter. So with this in mind, I feel the best strategy, at least for myself, and remember, the lawyers that I have chained up in my basement get a little rowdy unless I give a quick disclaimer. I'm not a lawyer, I'm not an accountant, I'm just some dude on the internet. You should speak with somebody with like certifications on the wall or something. Blah, 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 blah. You get the point. Okay, now that the chained up lawyers are happy for the moment, let's continue. While the income tax rates are at historically low rates, I feel that you should bite the bullet and pay your taxes now using a Roth IRA or Roth 401k designation instead of the traditional designation on your retirement accounts. That way you're able to take advantage of today's low rates with the presumption that the tax rates will increase in the coming decades before I retire and you retire. Also, remember, it's perfectly fine to have both a Roth and a traditional investment brokerage account. Now, it's important to know that just because you have two accounts doesn't mean that you can double up your contributions. You just split your contributions across the two or put all to one or all to the other. Either way. The beauty of having both accounts set up is you can choose which to contribute to this year, next year, the year after. You at any moment can use either one of the accounts. Now, don't forget to check out Webull and get your 2 free stocks when you deposit $100. One of those stocks will be valued up to $1,400. Act quickly because this offer to get your 2 free stocks ends soon. Also, after you get your stocks, you can just cash out if you want. And, free's free. Come on. Now, in the description, there's also a link to the portfolio of stocks that I currently invest in, if you want to check it out. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps with the YouTube algorithm. Thanks, and I'll see you on the next one.